Doing taxes is always complicated.
And the abundance of opinions on the internet doesn't help.
Hire your child to work and collect $12,000 per person.
So, before you make a mistake based on random tax advice you got from social media,
let's debunk some of the biggest tax myths. This is Kelly Phillips of Bloomberg Tax. She's been giving tax advice online for more than 17 years as TaxGirl. Myth number 1, create an LLC to write off your lifestyle.
Do you even know what a write-off is?
Yeah. It's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Simply creating an LLC doesn't make everything else in your house deductible. While there are instances where you may be able to deduct like home office expenses, if you're self-employed, not if you're an employee, it doesn't make your cable TV deductible. It doesn't make the extra sound system that you installed deductible. To be deductible as a business expense, clearly the expense needs to be tied to your trade or business. But then you have to go the next step. Is this something that other people who are in my occupation or in my business, is it what they're using? The IRS likes to say, is it ordinary and necessary? And chances are you're going to start looking at things like groceries and your PlayStation, and the answer is going to be no.
Myth number 2, my employer can hire me as an independent contractor to save them money.
You don't just decide, am I an independent contractor or an employee? Similarly, the employer can't make that determination for you either. There's a set of factors that the IRS looks at, and roughly that breaks down to the more control that your employer has over the way that you work and the manner that you work, then the more likely it is that you're an employee. And questions that you might want to ask yourself, if you're the employee, is there a set place where I have to go to work, or can I work from home? Does the employer have provisions that don't allow you to do work that competes with things that they do?
Signing a contract that says a worker is an independent contractor doesn't necessarily mean it's so. It's ultimately up to the IRS to decide. Myth number 3, undocumented workers never pay taxes.
People, your taxes are high because of illegal immigrants. That's right, illegal immigrants.
A widespread myth is that undocumented workers enjoy the benefits of living in the U.S., but go under the radar when it comes to paying taxes. But in truth, many pay more into the system than they get out.
Undocumented workers tend to pay taxes for one of two reasons. Either one, because it's the only way that they can be employed.
All salaried workers need a social security number. The problem for undocumented workers is that theirs isn't valid, but they still have taxes withheld in every paycheck. This means at the end of the year, they can't file for a return, which means many often end up overpaying.
The second reason is that many undocumented immigrants want to become citizens, so they don't want to do anything to jeopardize their chances when applying.
Myth number 4, you don't pay tax on cryptocurrency.
What is crypto, if not decentralized, anonymous, secure, and an existential threat to the powers that be?
A myth that helped drive the popularity of cryptocurrency is that it's untraceable and completely anonymous. This led some taxpayers to think they could avoid reporting their cryptocurrency to the IRS.
For example, if I get paid $10,000 worth of crypto, that's income. And then if I hold on to it and Bitcoin's doing awesome, and so in a month I decide, you know what, I'm going to cash out and it's $15,000, now I have a capital gain of $5,000. So it is taxable to you when you earn it, and then it's taxable again when you dispose of it.
And no, you can't hide it from the IRS. Myth number 5, money I received from the federal government due to the pandemic isn't taxed. Uncle Sam sent out several checks to help people ride out the pandemic. Some of the money is taxed, and some isn't. It can get confusing. So let's keep it simple with this pandemic relief-inspired speed round. Is unemployment taxed?
Yes, unemployment is a replacement for wages, so it's taxed. However, under the Biden stimulus plan, the first $10,200 is exempt from tax so long as your income is under $150,000.
Are stimulus checks taxed?
No, these are not taxed, but they may be reportable on your 1040 if you didn't get enough, so that you can get more. So not taxable, but it may be reportable.
And finally, what's the deal with the child tax credit?
Child tax credit has been significantly expanded under the stimulus plan, and there are lots of other credits available too.
And those are some of your biggest tax myths.